there's going to be some sort of mechanism put in place in terms of like a backstop, or there's going to be something happening there.
This is such a good point.
That will prevent massive cataclysmic
Structural
failures
of
okay
the system. Yeah.
And if there's not, say for example, if there's not, then the world's done.
All right, yeah. Well, let's get into it. Are we back to pull the trigger here?
Yeah,
I don't know.
we are gonna be back. I
nice.
told Dave just set it up right now.
Yeah, we're doing some
set it up again.
We were doing some other stuff. We always wove real estate into everything, but we're gonna keep this one more like hyper focused on real estate.
We're going back to pull the trigger.
Yeah. Love it. And let's start off with like something we're always talking about, which is just, man, the negativity out there. Like, we've gotten into Twitter a little bit more and all this stuff, and it's not. I would say, what percentage would you say is negative news to positive news, negative tweets to positive tweets? Give me a percentage that you think is out there right now.
Only the real estate market
in regard, investing, real estate, all that stuff. Let's keep it there
right now. So, how long would you say you were on Twitter before me being active? How long would you say you've been on Twitter for now?
Like active on Twitter, a few months.
Yeah, same.
It's not long.
Like after the new year, for sure.
Yeah,
maybe 2 months, 3 months max. 98%.
98%. I think that's accurate.
I've rarely seen someone. There's only a few guys. I'll actually put you in touch with this one guy. I can't remember what his name is, but he also shares the same mindset as us. Super smart guy. He's got a PhD. I remember seeing a post by him and saying, he's got an MBA, PhD. He's an engineer in the oil and gas industry, but he develops real estate. He's a developer, but he specializes in storage spaces and stuff like that. But he absolutely shares our mindset. Only guy I've ever really seen.
So rare.
Really, the only guy that I've seen. Maybe a couple other ones that I've come across, but the majority of it is very negative.
Okay, so why do you think that everybody's so negative out there? Like, why is that? Like, I'm trying to think. I rack my head around it. Am I an anomaly? Am I just like a perma bull that's just oblivious to all the negative news out there? Why is it 98-2? Why do I feel like I'm
so? Let me ask you this.
Here?
I actually had this conversation with Clark a little bit ago. When did you start investing?
I would say about 5 years ago.
Okay, so
like real estate.
Yeah.
Right?
So for me, I come from the Great Recession period when Windsor was tanked. Mm-hmm. So I have always been. So I feel I'm more cautious than you. I'm more bearish than you, I guess. Always because I have in the back of my mind when I started, right, that I've always been cautiously optimistic, but I'm still bullish on real estate.
So I'll say this though, in that time, like I'm trying to project myself there with my mindset today, and I would be thinking, okay, we're in a major border city. Yeah, prices are 40 to 60 grand for these condos, whatever you started buying. How much lower can they go? Mm-hmm. My cash flow is $400 or $500 a month. It's actually, in a way, it doesn't sound that hard to invest if you have the right mindset, which most people don't.
That mindset did not exist back then.
Well, you can't say nobody had it.
The majority of people, I didn't hear.
It's the same thing.
I agree with you. All I'm trying to say is
1 or 2% of people would have been like you that would be going to make these moves.
Yeah, I don't know anybody else around town. I'm sure there were, but I don't know anybody else around town that took complete advantage of that time. I
don't know, but people
that's what I'm saying. Yeah. I don't know. But being in the market, knowing other real estate investors, I don't know anybody.
Yeah.
Now, the reason why I'm going with the way that or the direction that I'm going with this is it's really easy to look back in hindsight, right? And think, oh, I would have fucking bought everything. Because when I tell people, like, when did you start your real estate career? And I'm like, back in 2007, 2008, 2009, during the Great Recession. They're like, oh, you're fucking lucky. You're lucky. I always get that shit.
That's true. I agree.
Maybe. Now, but was I? Was I lucky?
No, 100%. No. But what I would say as a more better mindset than my old self or most people is it's not that you were lucky. You just you focus on the fundamentals.
I agree.
What's the cash flow? What's the location? What's my cost here? What's my risk level?
Yeah.
And you just made moves despite an incredibly negative environment.
I don't even know if I took that much into consideration. My mindset back then was, okay, I dropped out of school. I don't have anything else going on. Basically, shit can't get much worse. And even if it does get much worse, shit's at like 30, 40,000. I bought a condo for 20 grand. Mm-hmm. So I'm like, what the fuck is going to happen? Even if it goes down 50%, I'm only losing 10 grand. It's not going to get worse, and it's only up from
were
here.
They making money at the
Yeah,
time?
of course. Yeah.
So that's what I mean, right?
Yeah.
In a way, you were focused on fundamentals. The fundamentals of real estate are cash flow.
That's what I'm saying.
It's not appreciation.
Yeah.
It's business. You're buying a business.
Exactly.
It's cash flow. So you didn't even know what you didn't know at the time.
Exactly.
You were buying small businesses that were making money.
I bought into the as simple fundamentals as you possibly could for real estate, that everybody's going to need a place to live. And Windsor was so shit at the time. It was my opinion that it couldn't get much worse.
Yeah. Now, what were the other 99% of Windsorites and investors doing at that time? What was their mindset?
They were scared shitless, and a lot of people were leaving.
Yes. So they weren't buying cash flowing properties because they thought the market was going to go to zero.
They actually thought, exactly.
Yeah, whatever, right?
They were also comparing it to Detroit, like River Rouge. There was houses selling there for $1, and I'm like, that's not going to happen. That's Detroit, and that's in like gangland. That's not going to happen, right? They're trying to get rid of properties. Mm-hmm. But I mean, I think back then it was a little bit different, only because we didn't have that same type of mindset. We didn't have, and also I didn't have a backup plan, so it was a little bit different in that sense as well, right? It's easy to make moves when you don't have a backup plan.
Let's say you have your mindset today. Let's say you project yourself back 20 years ago. Windsor was the dumps of Canada. What would your actions be now with the right mindset and the experience, projecting yourself back to that market? Would you be on the sidelines in fear?
Yeah.
Or would you be looking to make moves?
So I remember thinking when I was making those moves, I was thinking, fuck, I wish I had more money. Like, I'm not joking.
Yeah, but I'm saying, like, with your mindset now,
that's what I mean.
It'd be the same thing.
I would try to buy everything.
Yeah, you'd try to buy everything.
Yeah, everything.
But what about all the negative news? What if when you hopped on Twitter, they were telling you that rates were going to rise in the next 4 quarters and prices would go down further, and you're an idiot?
Yeah.
Right?
So
like, what would you do in that situation?
Yeah, I don't care that much. And the only reason why I shouldn't say I don't care. Of course I care, but at the end of the day, if you look at historical housing index, the trajectory for real estate values is it's always on the incline. It's always increasing, and it'll never not increase, right? I mean, you have real estate built out of inflationary products and materials, so it's nonstop going to simply increase in value. There's going to be roadblocks. There's going to be lulls in the market on that graph, but nonetheless, it's happened before. Even if you take a 100-year graph and pinpoint when we had the massive interest rates of 1980s, and you have COVID, and you have the 70s, and you have World War II, and like it's the graph is still up. It's still going up. Like, so I don't understand, right?
Yeah.
On a 100-year fucking graph.
And this is, like, I love what you said. It's real estate is made out of inflationary products.
It is, yeah.
Labor and materials. It's very and land.
And there's massive lead time. You can't just create this stuff, right?
Yeah.
Right.
So that's a very good point. And we're in an inflationary monetary system where the currency is constantly being debased. So you need more of the money to buy the same hard assets as you did last year. And that's just the way the system is. It's going to be that way until we die. So that's why the chart is always up and to the right. Those are some great.
Yeah. And people need a place to live. It's on Maslow's hierarchy of needs. So you need places to live.
Exactly. So these are the fundamentals. But why are people always saying the market's crashing, the world is ending? It's never a good time to buy real estate.
So I've got articles. I have some theory.
Yeah,
about
let's
this.
hear it. Let's hear it. I want to get into some articles after that.
Yeah.
I went back over the past 10 years. I've got an article from every year from major news agencies telling us that the world is ending. But
well, my theory is that by those people, so they post that kind of stuff because it feeds their confirmation bias, where they don't want to make moves, and they're too scared to make moves. They're not confident enough to make moves. So by them always posting the negativity of the negative side of everything, it allows them to buy time to justify not making a move.
It assuages their ego.
Exactly.
That says, hey, I'm smart for not making moves. Everybody that's out there pulling the trigger and buying real estate and buying businesses and buying cash
flow, they're going to get rinsed.
Yeah, and they want them to too.
It's actually really weird. Like,
it's really quite strange.
It is.
For the news agencies, actually, I read a great thread on Twitter where it was basically breaking down how much easier it is to build an audience by being negative. right?
Oh,
if you post a negative chart that's predicting, like interest rates rising or prices falling, you get, I don't know, 10, 20, 30x the comments,
is that right?
The likes and everything else. And he was pointing out people on Twitter, and he would say, this person does the negative news. This person does the negative news.
Right?
This person uses it. And I know a lot of people they know what they're doing. They're posting negative stuff and spinning it negative because it works and it sells.
Yeah.
And these news agencies are doing the same.
Yeah.
You post something positive and you lose, I don't know, 70, 80, 90% of your audience.
Yeah, just look at, all you have to do is turn the TV on, or watch the news for a couple minutes.
Yeah,
it's
exactly.
all negative.
That's why this is happening. You have to be on guard for this stuff, right? Like I'm very aware of it. You're very aware of it. I hope our audience is as well. That's why we love talking about this stuff. So here's an article here from Maclean's. Great Canadian real estate crash of 2013. The housing bubble has burst, and few will emerge unscathed. Okay. That's 2013. How much have prices up since then?
A decade ago.
2014, October 22nd, 2014. Bank of Canada issues warning over hot housing markets. Okay, so that's 2014. Canadian home prices to fall 40 to 50%. Financial author says, this is Global News, March 17th, 2015. How much are prices up since this time? Canada's housing market booms. Experts see trouble. March 15th, 2012. Will Canada's real estate bubble finally pop in 2017? No one knows for sure, but basically this article says yes, it will. So that's 2017. That's Motley Fool. And then we have 2023. Canada among countries most at risk of a housing crash, spiraling into bigger crisis, say these economists. Canada's housing market, after years of overheating, is already in crash territory.
What year is that?
That's this year. That's January 2023. So my point here is not that I know what's going to happen or you know what's going to happen, but the negative sirens are always going to be there.
Yeah. So listen to this. So imagine you saw that article in 2013 and you were like, fuck, I don't want, and you had opportunities and you're like, I'm not going to buy anything because the shit's going to crash. And then you're still waiting for it to crash.
And then in 2014.
Yeah. And then 2014 doesn't happen. And then 10 years later, it still doesn't really happen. Yeah. But it happens. So say, for example, in 2024, it happens. Well, okay, what's it going to go down from here? Another 20%? How much did you lose?
Dude.
How much did you lose?
It's almost infinite what you lost.
A crazy amount of money that you potentially lost.
It really is. And this is the problem with these articles and getting caught up in the negativity is it's always going to be there, right? It doesn't matter if the macroeconomics are never good, by the way, right?
No.
It's always, we're approaching the debt ceiling or
the war is going on here, or there's a war. It's happening. Yeah.
When you zoom out far enough, it's always incredibly scary.
Of course.
Right? Now, I understand. I understand macro. I listen to it. I pay attention to it. But macro does not inform my decisions. One of my favorite quotes, Charlie Munger, who's Warren Buffett's business partner there, he says, it was Warren Buffett says, Charlie and I spend no time on macro. Zero.
So when these guys say that kind of shit, do you believe that?
Yes, I believe what they're saying is they don't make their decisions on macro. I'm sure they're aware. They're not stupid.
Yeah.
They know what everybody's saying. They know what the noise is, but they understand that they're buying a business.
Yeah.
They're buying
based on
25 years of cash flow.
Yeah.
They're buying it with leveraged debt. How does the leverage work? How does my cash flow work? What are my numbers like in a worst case, best case scenario? And with real estate, we're doing the same thing. I'm not buying it with a prediction of massive price increases. I'm buying it for cash flow. I'm buying it like a business, which is how you help eliminate the risk. So how do you counterbalance the negativity? You're somebody that you've always made moves, right? This is year 20 straight of making moves. The whole time, as we've seen, it's been negative. How do you continue to make moves when the macro and everything else is telling you not to?
Yeah, I never really actually paid attention to it, to be honest with you. I actually didn't. It wasn't, which is kind of odd, but it's been me on social media. I haven't been on social media for all that long. I didn't adopt it early on. I didn't want to adopt it early on because I was a little bit afraid that if I come out and say what I wanted to say, that people are going to not want to buy my products or not want to support. But at the end of the day, I was just like, fuck this. I'm going to come out and do whatever I want anyways.
That's pretty cool.
But for me, I never really paid attention to a lot of these negative people. And something else that I've also noticed is that, going back to real estate, number one, how do you deny the fact that people need a place to live? They need a roof over their head. It's on the hierarchy of needs, housing or shelter. It's on the hierarchy of needs, and that's arguably very important. And then how do you argue all of the supporting information out there that real estate if you look back into history and the trajectory that it's on, it's always on an upward trajectory. Like you can't argue that. And then you have population growth. It's not like the population in the world or all of these countries that we're buying in or the cities that we're buying in, the population's decreasing, right?
Or across the globe.
Yeah, it's gotten even since we've been alive. I don't know how much it's gone up by what 25% maybe.
Probably more. It's probably the population of the world.
Do you know what I'm saying?
Doubled.
So like let's look at that real quick for a second. What was the population back in 1983 in the world? Question mark.
I got it here. 4.6 billion.
Back in 1983?
Yeah.
So it's doubled.
Yeah.
Since we've been alive.
Current population is almost 8 billion. So yeah, close to a double.
Yeah, it's close to a double. So how do you like, so I don't know. How do you argue with those fundamentals?
Yeah, the population has doubled.
Yeah.
The value of the dollar has decreased by probably 100%.
Yeah.
Right? So that's inflationary.
Yeah.
The land hasn't increased in size, right?
You have limited amount of land, not even necessarily land. You don't have a
buildable land.
Buildable land and serviceable land.
People need to understand
exactly. There's a big difference. Right?
So
people are always like, we have so much land in Canada, but nobody wants to live in a fucking igloo in northern Saskatchewan or northwest. Like I don't know.
And there's no services up there.
Exactly. There's no services. The infrastructure needed to get there to build there
billions of dollars.
It
would make any project that you tried to, if you were a developer trying to go build in these remote areas,
can't do it.
None of the numbers would work. So it'd be impossible. Yeah. So I think what you're saying here, whether knowingly or not, is like you're always focusing on the fundamentals of real estate, which is, if you break down the fundamentals, it's always supply and demand.
Yeah, like I'm not buying property in rural areas where nobody really lives or there's not really any kind of industry or job market. That's not where I'm buying. I'm buying, and that's not a fundamental. Right? That's not what I'm basing my fundamentals on. I want to see some hard, analytical, factual data to support my buying.
But what if while you're looking at a property, the news is saying that the rates might go up next quarter, right?
Yeah.
Or what if they're predicting a mass housing crisis based on bank failures across the country, right? So how do you digest that negativity and still operate?
Well, first of all, I don't have that much money in the bank anyways to fucking make that a concern of mine, okay? So, number one, in terms of like cash deposits, because from my perspective, if you have that much money in the bank, there's a problem.
I more mean if the banks fail, that means there's a lot of stuff is going bad.
With the mortgage and stuff like that, yeah. Like at the end of the day, from my perspective, if that's happening, there's more things to be worried about than me losing my mortgage on that property or the bank failing on that mortgage. I'll again, I don't know the economics of that kind of situation happening, but all I know is that I'm going to, let me give you an analogy, okay? Because I don't know what would happen. That's the problem. If the banks fail, we got the loan on the North Miami property from Bayview or with Banesco, okay? Mm-hmm. If Banesco fails, do I know what's going to happen to my mortgage? No. All I know is I have a mortgage at Banesco that's with Bayview Palms, but do I think that I'm the only investor with Banesco?
No, I more meant if the banks are failing, that means there's major economic problems.
Exactly. Yeah. So what I'm saying is there's much worse issues going on than that.
Than
my mortgage your on my investment property, and then not only that. That's an $8 million mortgage or $8 million property. There's people with $1 billion there. Like those guys. There's going to be some sort of mechanism put in place in terms of like a backstop or there's going to be something happening there.
This is such a good point.
There's going to be something there that will prevent massive cataclysmic
structural failures of the system. Yeah.
And if there's not, say, for example, if there's not, then the world's done. Then we're just done.
It won't even matter.
We're just done.
And this is why, like, I agree with what you're saying. You
get what I mean? And then not only that, but let me get even a little further. And if that happens, There's nothing I'm going to do about it. What am I going to do about it? Like, seriously, what am I going to do about that?
Nothing. Exactly. There's
like, what am I going to do about that?
Ultimately, you're right. There's no point in worrying about the worst case scenario because the worst case scenario is game over.
Exactly.
And then everybody loses. But I love what you said there about, like, there's way bigger fish than you. Hundreds of billions of dollars of real estate ownership. And we know that the rich people always win because the game is rigged.
Yeah.
The rich people are part of the game. If the billionaires speak up, they're going to step in to stop, right, Wall Street from failing and the banks from failing and protecting those billionaires, which will filter down to protecting the smaller people as well.
And let me tell you this. This is why when I buy real estate, I buy real estate the right way. I make sure it cash flows. I make sure it's in the right location. Because in the event, say for example, Banesco fails or something like that happens, and again, I don't know what the next step is when you have a mortgage and that bank fails. I don't know what that is. Maybe another bank picks up that mortgage. I don't know. But I want to be in a decent position for another bank to pick something up. If in the event that happens,
that's
right?
A good point.
But that's not even why I'm buying based on cash flow and location. It's because that's the right fucking move. Mm-hmm. That's the right move, and that's the fundamental move of real estate. That's what you have to do to be successful.
At any point in your investigation process of real estate, whether or not you're going to make a purchase, are you saying, hey, in 6 months will be the best time because of macroeconomic data, or I'm going to wait until the news starts changing and the rates start coming down? Or are you always focused only on the fundamentals of the particular property that you're investigating? Like, do you ever, in short, are you ever trying to time that purchase, or is it based on that particular property independent of macro?
So this is truly how I do it. So I base it off of the current time in the market, current property that I'm looking at. I underwrite those into my underwriting program or whatever. And then I do, if there's volatile times, which there are volatile times right now, these are odd times right now, right? There's a lot of confusion. There's a lot of fear in the market, whatever. What I'll do is I'll build in a little bit of extra risk. If, say, for example, if there's a Fed announcement coming up next week or next month or whatever, and the consensus is that they're increasing rates by 25 basis points, like, for example, this past Wednesday, the Feds in the U.S. increased rates by 25 basis points. What I would have done if I was underwriting a property, a week before, I would have built in that risk in the rate, so that if the deal works with that increase, well, then it's a buy, and it doesn't matter. It doesn't matter to me. That's how I buy it, because I'm not going to risk the opportunity cost of not making moves in any type of market. The opportunity is too great not to make moves.
Yeah, this is a very good point. And with that in mind, like, a lot of people are continuously on the sidelines. They're always so focused on these macroeconomics, which are always terrifying. What's your advice to the average person that isn't out there necessarily pulling the trigger, from somebody that's made hundreds and thousands of moves in his life financially? Like, what's your advice for people?
Hundreds of thousands.
Micro moves, right? Sure, a lot of times. Yeah. What's your advice for people like looking, like, they know they have to put their money to work. They know they have to do something different to get ahead. The game is rigged. You can't save money in this environment. Inflation's too hot. They know they should be buying real estate. They know they should be investing. What's your advice in light of all the negativity that's out there? How do we stay positive here?
Yeah. I think what you always have to remember, and the mindset that you have to truly adopt, is that you will always lose more money not making moves and trying to predict corrections than the corrections itself.
Break that down. Like, give us maybe even an example of how that would play out in real life. How you would lose? It doesn't seem to make sense, right? How would you lose more money if you're on the sidelines?
Yeah.
When a market crashes, right?
Exactly. Yeah. I mean,
break that down.
You have you have inflationary pressure on any kind of money that you're holding in your bank account, anything like that right now.
It's significant.
It's really significant.
And it always has been.
Yeah, and it's way higher than what the feds or the government's putting out there. It's always way higher. Because a lot of the stuff that they base that off of isn't true inflation. Even the inflationary materials that are used to buy real estate or used to build real estate is significant still, and higher than what they're claiming. General inflation being at. But I mean, in terms of breaking that down, you need to adopt the mindset that even in the event something does correct to some extent, this is a long game. you have to look at it from the perspective of not weeks, not months, not even a couple of years, like minimum 5, 10, something along minimum like that. And if you take that smaller, I guess, duration of time and factor that into your risk models, you're going to get hurt. You will get hurt. But if you take a longer term play, I mean, yeah,
if you've underwritten the property properly, if it's cash flow positive, if you've built in risk into your model, if you've fixed your debt at affordable levels, you haven't over leveraged yourself.
Wait, Connor, get rid of all that shit that I just rambled on about.
No, I think it was
I don't think I answered your question in the right way. That what you wanted to hear.
No, yeah.
I don't think so.
I think it was fun.
You think so?
Yeah.
I don't think so. We can go again. I think I kind of answered it where you can't be sitting on the sidelines where the opportunity cost is too great for you to sit on the sidelines. It just is.
And then you have to expand your timeline.
Exactly. You have to expand the timeline, and you have to adopt a mentality and the mindset that the risk in you not taking action is far too great.
Yeah. The opportunity cost is incalculable because you don't gain any skill or experience by sitting on the sidelines. Inflation is eating away any savings that you think you're saving. You're getting absolutely smoked by 7 to 10% a year. And you're never, if you have that mindset now, you're always going to have the mindset of waiting for the right time, and the right time will never come. It never comes. I can't remember from 2012 till now, we've had a 10+ year bull run. I can't remember one time when the coast was clear.
Let me give you an example. We have a couple friends and a couple people that I even know that maybe you don't even, who knows. From the first time that I ever bought real estate, I've acquired hundreds of units. We have friends and I know some people that have acquired maybe one, because they were always waiting for the right time to buy. And for the last decade, last 15 years, they've always felt like it wasn't the right time to buy because they were waiting for the crash. They were waiting for the correction all the time. And throughout this time, I've acquired hundreds of units. So even if my shit gets cut in half,
which would be
insane,
massive,
it would never happen. Even if my shit gets cut in half in terms of net worth and value, how much fucking further ahead am I? Seriously,
100 to 1,000x.
Like it's not even. I don't even think you can. I don't even think you can throw it in the calculator.
You can't.
Yeah, So you take that into approach. And that's only over the last 10 to 15 years.
Yeah.
That's it. Last 10 to 15 years. So you sitting on the sidelines doing fuck all, what's that gonna do for you? It's not gonna do anything.
Yeah. Now there's some I love that, right? It's focusing on the fundamentals and not the market conditions. I think the reason they're not pulling the trigger is because they're caught up in the negativity, right? You talk to your friends, you talk to your parents, you turn on the news, you open Facebook, you open Twitter. Everybody's telling you it's a bad period of time to buy. Every year, though, it's not just now. Everybody thinks, well, it's going to get better. It's going to get better. It's never going to get better on Twitter. It's never going to get better in the news. It's never going to get better in macro. It's always going to be scary. You can't. It's almost like you're just immune to it. It's weird. You've always been immune.
Yeah, I don't like.
I
almost feel like the best times to. I know the best times to buy is when there's mass confusion and fear is at its highest in the market.
And it seems to be like.
It's when I've made the most money ever.
You said mass confusion. I'll put it like this. It's always confusion.
Yeah.
It's just there's more confusion or less confusion. But but to the average person,
more fear, the most fear.
To the average person, it's always fear and it's always confusion. It's just it scales up and down.
Yeah.
But that's why they usually never pull the trigger to begin with. So like there's two. You can be positive, you can be negative, right? You can be a positive thinker looking for opportunities, or you can be a negative person, take an opportunity and spin it negatively. I kind of like to, I'm a glass half full kind of guy, but I don't like to get too half full, right? It's kind of like I like to stay right in the middle. I analyze both sides of it, and I'm going to lean towards making a move. What's some advice for you on staying positive? How do you get yourself around the right people that can inspire you in a negative environment that's never going to get better, in my opinion, social media and all that stuff?
Yeah.
How do we insulate ourselves so that we can avoid that negativity and continue to put our money to work?
Yeah, obviously you have to listen to the right people. If you're always listening to negative people, you're going to be you are somewhat of a product of your environment, right? And your environment doesn't necessarily have to be physical, right? So if you're always listening to negative people, you're going to turn negative, probably, or you're gonna have a negative outlook on whatever you're being sold, right? And then not only that, but I think you need to pay attention to people that are in the positions or have been in the positions or are headed in the position that you want to be in.
So
and
true,
how are you going to get into those positions that, how are you going to get into those positions listening to people that never make moves? You're not going to be able to accomplish anything if you don't make any moves. And there's always going to be an argument for not making a move. All the time, like what you just said. There's always an argument.
As you're saying this, Dan, I'm thinking to myself, like I'm thinking of my social circle. Let's say there's 100 people or so, friends, family, extended family, whatever. I'm trying to pull out of my immediate circle the number of people that I could go to right now and say, hey, let's talk about real estate investing. And they'd be like, oh yeah, like they would be excited about it. Every one of those people would be negative. The average person, right?
Yeah.
My parents, my brother, my sister, my sister-in-law, my brother, like everybody would come at me with the negative side of it. Oh, now's not a good time. Now's not a good time. And I think to your point, why would I go to them?
Yeah.
Right? I know what they're going to say. Why don't I go to somebody like yourself or other experienced investors or people that have gotten to a higher level? I bet you they're going to have a very different story.
I'll tell you this.
The average person.
Yeah, I'll tell you this. The people that I see that are always posting about negative shit, especially on Twitter, especially online, they rarely have anything to, write home about, or they've rarely accomplished something of substance.
This is key.
Do you get what I'm trying to say? Yeah. And the people that claim that they have are anonymous accounts or whatever, so there's no way to actually, not that you should go out there and verify everybody, but I mean, I think it is important to have some sort of verification if you're going to be taking advice from people that they know what they're talking about and they have done it, right? I mean, why would you ever go to the gym and get some personal training advice from a fat guy? Like, it doesn't make that is illogical.
Yeah.
It's illogical.
It's a good analogy here.
Walk the walk. Like, I want to take advice from people that walk the walk. And something that I have noticed is the most successful people that I have seen on Twitter, on social media, whatever, they make moves. No matter what is going on, they always are making moves. Same thing with the billionaires, Warren Buffett, Charlie Munger. Like, these guys have always said shit during any. Again, what's another famous quote by Warren Buffett is, "When there's greed in the market, be fearful, and when there's fear in the market, be greedy." It's exactly the same. I apply that. That was the exact same mindset that I applied to get to where I am all the time. And it's worked out.
When we were talking before, you kind of brought up a good point. You were down in Florida. I couldn't make it, unfortunately, but this week, and you were telling me you're on Ocean Drive.
Yeah.
And you're looking around at the real estate around you, and you said something very interesting. You're like, these people that own this stuff, you think they're sitting around on Twitter right now, doom scrolling, they call it, just looking at the negative news?
No.
They don't have time for that.
No.
They don't care what macro's saying. They're analyzing deals on a case-by-case basis. They're putting their money to work. They don't care what the plebs on Twitter are saying, or the people that haven't done anything.
Yeah.
Like, I found myself in kind of a Twitter argument the other day where this guy was, he's been calling for like the world to end for the past 6 months straight, and real estate's going to crash and all this. I said, well, hey, do you recommend renting right now instead of buying? And he said, I wouldn't be buying in this environment. I'm like, well, do you rent or do you own a home? And he says, I own a home free and clear. I'm like, why don't you sell it and buy it back during the crash then? Because you're so sure it's going to happen. You're going to make hundreds of thousands of dollars. Like, sell your house now, buy it back when the crash, like, put your money where your mouth is. And of course, crickets.
Yeah.
But I'm not, my point is that, like, these people that are saying this stuff, they generally don't make any moves. They don't have anything to show for it, number one. Number two, their actions aren't backing up what they're saying, because if they were, they would sell whatever they're living in, right? And they'd go rent, and they would time the market like they think they can. Oh, it's going to crash, Okay, sell now, go buy back.
Or they'd be successful enough to realize that, okay, well, that's, I'm actually not leveraging my principal residence. Like, why wouldn't I be leveraging my principal residence? I could be, even if in a private mortgage, I could be getting fucking double the amount of interest. Like, just dumb shit like that. Or like, it just makes no sense. Like, the arguments that these guys present don't make any sense. It's indicative of them never making moves, never getting to a certain position in their life that allows that has any sort of credibility for what they're saying in terms of in terms of somebody that is substantially successful that should take their advice. It really doesn't make any sense.
Yeah.
They're pulling viewership and they're pulling their clout based off negativity. Mm-hmm. And that is it. Mm-hmm. That's it. And people love it. People love the negative. It's contagious. It really is.
And
it's fucking contagious.
It sells 100%. So if you want to insulate yourself from that, you would recommend tune out the noise.
You have to.
Surround yourself with experienced, successful people as much as you can. You can do that on social media now, by the way, which is awesome. Right? You can listen to high-level people that are on podcasts that have made, gotten to levels that you'll never get to probably, but you can get inspiration from them and insulate yourself from the negativity.
Yeah, it's so important to do that.
Yeah, it's massive. So and then tune out the news. Like macro is so terrifying if you believe it. It'll never be clear. The macro picture will never be like, oh, everything's great, go buy real estate. No macro analyst will ever say that to you. No news talking head.
They can't say it.
They can't say it. They won't say it. They'll never say it. If you're waiting for those people to tell you, folks, you're going to be on the sidelines until the day you die.
Yeah, seriously.
Anyways, man, glad to be back on. Oh, we'll just cut this out. But
glad to be back on Pull the Trigger podcast.
But
we'll do that. We'll add that in there.
Yeah.
Yeah. No, it's good. Yeah, well, very, very real estate focused podcast. Exactly how we're making moves.